Well, let's bring in Marcus Bogdan now from Blackmore Capital to get his view of how to position your portfolio as we head right into the thick of earnings season. Morning, Marcus. Thanks for joining us on AusBiz. So this is really front and centre of every investor's mind, big and small. Earnings season, how to position yourself. How dynamic do people need to be at this point in time, or do they really need to start strategizing and making those trades later on in those earnings?
Good morning. Well, we're at the point in the market where momentum is strong, but valuations are very, very stretched. So for where we're positioned at the moment is absolutely at the quality end. We want to have earnings certainty, we want to have transparency and earnings, and we want to have strong balance sheets, given the level of uncertainty that we're seeing at the moment. The results coming up, profits could be down 15 to 20%. So centering around that quality end of the market. So where is that? It's in consumer staples. It's in the core industrial defensive companies. It's in telcos. That's where I think you need to be in these earnings season. I think it's still too early to go for the L-shaped type of stocks, namely the banks or the companies that are really affected by social distancing, because we're still a long way before we can go back to any sort of normal levels of activity.
Yeah, and it's a concern. We talk about the second wave that's clearly here to an extent in Australia with Victoria and New South Wales. You just wonder, does this impact your thoughts for going forward? Because one lockdown at the beginning, I guess, is one thing, and we had a bit of certainty where we thought perhaps we were through the worst of it. Now that we've had this second wave, you wonder how many more are to come until the end of this, pandemic, I guess you could say. So does this impact the longer term strategy for you, Marcus?
Again, you've seen that. I think you'll see some moderation in the United States with sort of a pause there and reopenings. You're seeing it in Australia. You would have to say that activity levels are going to be reduced. And so, again, it's that positioning in those companies which can survive and continue to get revenue growth and earnings growth, and most importantly, to be able to pay dividends to shareholders. And so for this coming reporting season, I think certainty around dividend income is particularly important, and that's where we want to be positioned. We have looked at other areas of cyclicality. I think you need to see where the evidence is of a recovery. You're certainly seeing that in China with iron ore and BHP and Rio. And again, I think they will be very good dividend payers. And so that's where our core focus is at the moment until we get some more sort of transparency about where we can come out of this recovery. But at this stage, very much centred on sort of defensive growth and only cyclicals where we can see evidence of good pricing and good volumes.
Marcus, some of the biggest crossings that have taken place in our local market have been for the stock CSL. There have been two enormous ones in the past few weeks alone. What's your take on this stock at this price valuation? Clearly, there's a lot of interest in the market.
Yes, there is. I mean, healthcare is really interesting in the pandemic because historically in a recession, you would float towards the healthcare companies because of the defensive nature of their earnings. But with the pandemic, you're seeing fewer people going to GPs, fewer people getting pathology tests, except for COVID, and you're seeing fewer elective surgeries. So for CSL, almost 50% of their revenue is generated in the US market. They require plasma, and they collect it from patients that visit their centres. Those centres have seen, a downturn of up to 40% in volumes as people can't get to the centres readily. They are getting supported by a range of government measures because previously people would flood to the centres in an economic downturn because they were getting paid to donate their plasma. So this has got very sort of unique characteristics for the pandemic. And so you had very strong numbers for plasma collections up to March, but then you've seen a very sharp at the end of the June quarter. We think that will stabilise. and we think that they can get price increases for their products. But offsetting that, there's a couple of really strong offsets for that. Is their influenza business. They're number 2 in the world there, and we've seen in Australia record levels, volumes up 30% for flu vaccinations in Australia, and in the United States and in Europe they've sold out. Every manufacturer has sold out, and the demand is particularly strong there. So I think that's an important offset for the declines that you're seeing in the plasma in the United States in the short term. CSL are priced on a price earnings ratio of around 40 times on a forward PE, which we think is pretty full, but we do maintain that as a core stock in the portfolio, and we would add to that if there was a pullback either in CSL or in the market more broadly.
Marcus, we appreciate your time on the program and your insights there. Thanks for joining us.
You're welcome. Thank you.